Hi everyone, welcome to today's update for BTC SOL market cap. I got some good feedback recently actually that I need to probably tell you guys the levels because there's some people out there that are only able to listen to these things and not actually be able to view them. So I'll work on that. Just keep the feedback coming because I think I might have been born to be a trader, but maybe not a YouTuber. So we'll work on improving my YouTuberness. Um, So with the liquidity at the moment, it's starting to even out. Maybe even building up a little bit more on the downside. But I don't think they're going to take that. So not immediately anyway. We've got so 1 day definitely more longs coming in on both SOL and BTC. We've got heavy shorts. When you look on BTC, we've got heavy shorts if you look at 7 day positions, and also quite a lot of shorts down on SOL as well. So I'm thinking that, and I'll show you in the charts the confluence of this later, but I'm thinking that we're going to see that sort of 170 to 175 range hit on SOL, and we may even take a decent liquidity sweep, certainly up to 117 in BTC. So that's based on 7 day liquidity. 30-day liquidity, these positions have been open a bit longer, and they may get protected. I mean, you could see BTC go and try to sweep everything that's up in that upper area in the 120 to 123 area. Possible. A little bit of a bad sign if it does that because they're only going to take all that stuff at the top if they really want to drive it down. Otherwise, they'll just try to build up everything in between for the final push up. So SOL doesn't really have that much sitting up above 175. So yeah, it might go higher than that if more positions build in the shorter term. But if you look through these, basically the liquidity range is sort of the low 150s through to that sort of 175 on SOL. So yeah, what we're looking at really is it's Monday. Monday is usually the final day, whatever kind of trap they try to put traders into, starting on Friday. So we've hit those levels on Friday and we've started to move up. So we hit that sort of 150 level. We hit the 111-ish level on SOL, on BTC, and we've started to move up. I think they might actually continue up today, take some of that liquidity, and then reject. So let's jump into the charts and let's see why that is. So first of all, SOL BTC Strength. We're looking at opening a candle either on the correct side of the downtrend for the next one to be a bit more free to move. So, and we're certainly still holding the uptrend. So whether it bounces down or up first, it has the ability to move up once it gets onto the other side of that trend. There's 2 hours and 38 minutes to go, before daily close. So if they really want to make this hard, they'll push this down. They'll sell down the strength prior to close. But as it stands right now, it looks like it's going to try and get over the inside of that interior, and that would give it the ability to move a bit. So if we look at that on the 5-day close today, there's a range trend being developed, and as long as the price doesn't go much lower, the new candle will open with support of the range trend, and then it will be able to move. So the highest point I'd expect is probably the 0.0016 area, which would be the 5-day trend in Confluence with a retest of the break, which caused the rejection in Confluence with the new break that will get developed just below that level. I wouldn't expect it to go much higher than that based on the 5-day range that it's in. So one of the reasons why I think this could be a trap is if we hit that, we've already utilized our hold level down here. So the the level that's sort of around that 0.00141, if we hit the 163 area, which would be confluence of a first touch trend rejection along with both an origin level and a break level and another break level, all forming in that area, then really we would actually reject all the way back down. So it's, yeah, you could see a move up and then just a dump down in strength, like a mini altcoin run, just on that. And so if we come across to, say, the weekly, it looks like we're going to close under this range trend that's here. So if we do that, we can push through that, and we then have a weekly hold level up here around the 0.00154 area. So if we push through that range trend from the wrong side, hit that hold level, we will most likely reject straight back down. So it looks at this like they're looking to maybe turn the tap up on the altcoins for a little bit, get them moving, but they're possibly going to get them moving from a position of rejection. So yeah, straight back down. And the same sort of thing goes when you start looking at some of the really high time frame stuff like the 3 week. Now it's already hit the hold level on the 3 week, but it's going to open from a position unless it does get back up over. It would have to get back up over about 0.00145 and open on the other side of the range trend. If it did that, the hold level is there at 1.6. It's already been hit, but it can reject again. So there's a bit of confluence there. Now, if it actually breaks through the break level on the 3 week, and this is a much higher time frame, so if it can get through the break level on the 3 week and close over it, then it can start to look at these higher range trends up here. But to even be able to get to that 0.0021 level, it's really got to be able to close a candle over this. And if it doesn't do it with this one, then it's going to end up being the next one, which is, could take another 3 weeks. So, and when we look at the 6 week, we haven't lost our 6 week trend, but we have rejected off the back side of it. We're holding the 6 week range trend, which comes down here. So we could go up on the open of the next candle, reject down, and then bounce up again, or we could go down and then up. But we're still really stuck in this area. And yeah, so I think, that 0.00113 is sort of about the low, and then as you can see, more confluence with potentially an opening of a new candle and then a rejection off the 0.0016 sort of area. So that's your strength. As far as safety assets, so BTCD and USD and all the stables, we're rejecting back down under the break, so we like to see this. It would be good if it pushed down under the range trend, like if we could get down to about 68.26%, or somewhere just under that range trend prior to close, so in the next 2.5 hours, then it could open the other one in a good position to actually take a dump back down to the bottom of that range. In which case, this is a deviation versus an actual break, and there wouldn't be any support in any of this. It would be rejection, and you'd be heading back down to the 66.6 sort of area again, depending on how much time it takes to wander its way down there. So it would be good to see that happen if we want to get that little boost or little pump out of anything today. So some of the stuff that's still in play, it looks like we've got back up over the trend on the 15-day. So that's around that 161.3 level. And if that gets support on that trend, it'll go and retest that break up there at 187. So that's good. It gives us sort of that level of 187 still on the board. There's 10 days to go before the next candle, so nothing says this can't dip down, go up, dip down, go up. It's got a lot of time on it still, but the levels still seem to be getting adhered to. Our monthly move, we're still ranging up from the monthly. That's another sort of 187 target, with the entry there was 156.12. Nothing's really changed with this. Yeah, so it bounced off the hold level. It is a bit strange to see such a high time frame like this just bouncing off its level. They normally try to get a bit of liquidity from underneath it before they go up. The fact that they haven't done that sort of says to me that they haven't actually finished here, and this bounce is just all part of the fake move that might be part of Monday. And I think the real tell will be on a lower time frame what it does between here and sort of 175, particularly if we start to see short squeezes of some of these areas. Like as the price has been going down, they've made areas like 168, 165 that have been almost engineered to look like they are really, really strong resistance areas, but they're actually really not. And it's if they start to sort of creep up to those and then just power through them, then they're doing a bit of a liquidity sweep. And then I would say that you're probably not going to see the monthly target in the short term. If anything, they'll take that liquidity from above those sort of 165, 168 areas, and then they'll dive down probably to the weekly levels or lower in that 153 range. So this high time frame stuff, like if you look at it on the high time frame, it just looks like one big candle. But if you really dive into it on the lower time frame, you can see the way it goes up and down and up and down. So anything's possible. So BTC hit our target perfectly. This level here at 114.675, you'll notice that it hit basically the trend and the horizontal level at the same time, and then we got a rejection. The rejection is recovered off the inverse, so it looks like it's so this is actually very bullish. So you've got this inverse here, which has held the price up. It hasn't really had to even test anything lower. It's just heading back up there again. So from a daily perspective, what we want to see is we want to see that creep back up so that the daily candle over here can open on the other side of this trend. So we want to be sort of around, where do you have to be? Probably around that 114.8 would be quite a safe area to open, and maybe a little bit lower. If it can do that, then the new candle opens on the other side of the trend, which at least gives it about a 50-50 chance of being able to break the trend. It doesn't break it till it hard closes it, but if it's a candle that drives through it from the underside of the trend, then it doesn't have any chance breaking it. So for us to actually get a sustainable move up to these upper levels, we really need that to be opening on the other side of that trend. If it opens under that trend and just keeps driving through to these higher levels, then that's if we start to see it open under trend and then head to 116, 117 or anything like that, which are these upper resistance levels based on the ranges that were all broken in here. If it does it like that, then definitely this is a trap. Opening underneath a trend and then diving through into, or diving up into resistance is exactly how they then reject back down to the underside of the trend. If it gets back up into here and then opens, it's more sustainable. So we'll see how that plays out towards the end of the day. Summary being, we really want to close the day over that 114.6 or 114.8, something around there, to make sure it's opening on the right side of that trend. And we're still going to have that 2-day support, so that's good. That doesn't close for another day, so it could reverse, go the other way. It's an open on trend, so therefore it's a 50-50. It's the next candle that sort of is the one that really tells whether this holds. And this is one of the main reasons we're sort of seeing a bit of pull up in BTC. So this is kind of what we talked about. We had a resistance through here. We opened on the trend. We've dived the lower trend. And so when you do that and you run into some form of support, which is the inverse level here at 112, typically the inverse level tries to push the price back to trend. So, and it normally tries to do it. The way it would typically behave is they'll stay down here as long as possible to get as many people to capitulate. So if they can't get if they can't liquidate you, they just want you to be in drawdown, and then they want you to freak out and you to close. And then right near the end of the time period, so we're a 5-day candle and we've got 2 hours to go, you start to see strength come in and you start to see the price move back up to trend. Now, if we don't get over that trend on this candle, then you can say the reverse is then happening, and we're actually starting from the wrong side of the trend. And if we start from the wrong side of the trend, we're probably going to push up, find some resistance, and reject back down. So that gives a bit more confluence in to trap. So we've got that sort of rough hold level there that will develop, and that's around that 117 mark. So if we open this candle right here and we push up to that 117, we are probably going to reject down. Really, really high chance of a rejection down. So where this stops, e.g. if it stops right here, or even a little bit higher up, opens the next candle, pushes up, dump down. And inverse levels don't normally give a sustainable resistance or support. So very similar to what we're seeing on the 2-day, where we've hit an inverse level and we've had that rejection, but now we're seeing that it's not really rejecting that badly. Same thing, we've hit an inverse level. It's not the same as if you hit backside hold levels or other hold levels. So if this rejects off the backside of that trend, then the next step really is this 110 or this 108 level down here. Because normally this backside level, assuming that is not a touch and it was a sort of a bit of a fake out, normally this backside level is designed when touched to create a move in a trend. So it might end up closing, might give us sort of, even 10 days worth of strength is possible, and it might move this. It might move this trend. And then normally after that, it would come back down to this front side level, and the front side level around 108.3 would be the one that is required to accumulate contracts to then go through, break the trend. So you normally see this. So this is on the assumption that that was not actually the backside test there, because it didn't quite touch, although looking at the strength of that, it could well be. So if this 110 level was not touched, oops, it's kind of attached to the wrong place. If this was not touched, you would expect it to come to that level, bounce off that level, and move the trend, take some up liquidity, something like that. And then normally at that point, it comes back to here. And then wherever the new trend is, it's this front side level here that either breaks the trend or fails. So that's kind of what you could see from that. Now, if this was the actual test here of that backside level, then this is just going to reject and it's going to come down here to 108, 108.297. So yeah, so you probably best to keep a bit of an eye on that. A 5-day time frame can be something that plays out typically anywhere from hours if there's mass FUD, inverse tweets. If someone comes out with something that's like, all doom and gloom, and then 2 days later after the weekend or whatever, they come out with something that's all positive. Or it can be something that takes 20 days or more to play out based on normal range creation. And if this next candle that is from here closes, even if it closes positively, one of the issues you'll face with that is that it can create a localized range trend off that. So then that's another rejection. So it really has to close positively, either extremely positively, like with a big sharp angle on it, which allows it to then spend some time and then go up, or it has to close with such a flat top that the new one can open on the other side of it and bounce. So, yeah, I wouldn't say we're out of the woods there. And guess what? More Confluence. So we've pulled back down. This is a 43-day time frame, so you don't get many of these closes, obviously, but it's pulled back down under the trend. If it pushes back up over that before the end of the day, good. If it doesn't, then it's probably going to reject off that. And you'll notice that the number seems to be about 117 across all of these time frames. So that's where the confluence is. Now this will create a hold level. It's a hold level down at 102, which is pretty low. So instead of maybe thinking 108, we now potentially have 102 as somewhere that this trend could reject to. So it's a bit scary. Some of these bigger time frames have got some pretty low lows that they could kick in. But it doesn't always mean they will. Like, there's a level down here in the 60s. It's never been hit. Mostly it never got hit because we managed to get up above here. We managed to get up above another trend. We hard closed that trend. It tried to come back, but of course it ran out of time. It went back up above the trend. It became support and it kept moving. So, but there is, I guess, the thing to take from this is that there is more confluence around a Monday fake move that could even get up to that sort of level there, could push through the trend, and then come back down. So keep an eye out when you're looking at when it starts to get towards things like 117. And guess what? More confluence. So on the 1 week, BTC is going to, so as you can see, it's bounced here at 111, 112 off the weekly range trend through here. So it's a hard close range trend. It was hard closed by that candle last week. It's come back down. It's tapped it perfectly. It's heading most likely to 117. Reason to be heading to 117 is that if it doesn't get there in the next 2 hours, it creates this new hold level here, which is 117. Now, if it does get through that and push up through that hold level, then it's going to once again run into the trend again, which is up around 121. I don't really want to see it do that. It would be nicer if it rejected off 117, came back down, hit 110, and then had a nice sustainable push through trend with some liquidity taken and no reason to go down. But I guess we'll see how it plays out. But again, more confluence around be careful at 117. And if it dives, there's the backside of this untested range here is at 110. Backside, the next one's sort of 108, 106. So you can sort of see the confluence in all these numbers. We haven't retested that 110. I would not be confident in saying to anyone that we're going to take a next leg up unless we do. We might, because if too many people expect it, then it might just literally get left behind until we dump into the bear. But it's unlikely. I reckon we're going to create a hole. We're going to hit a hole. We're going to hit some of those trends. There's so much confluence around that 117 area, and the timing of it being Monday false move, induce people into longs, add to the liquidity pool below, and then nuke through it. So and guess what? More confluence. So our monthly is not hard closed. It's not a hard closed trend on the monthly, and we've got these levels down here. So good news is we've still got that support trend. So if it goes down, it goes up, which is great. Now, on to SOL. So SOL is still bouncing. It's run into an 8-hour hold. It's going to take a bit of time to break that. So I'd be expecting to see 165, 168, and at a push, maybe 175 for a rejection off the inverse. Now we do have the hold level all the way up there at that 186.6. So all things considered, it has very much the same levels in play across most time frames, the same as what BTC does. Taking some profit into things like the 8H and then adding it back on the recovery, which seems to be what it's doing now, makes a bit of sense. If we close a 1 hour candle over top of that 162.1 level, pretty much, if we can close a free candle on the 1 hour over that, then that gives you the ability to have that next leg up into the 164.3 and then so on and so forth. So that's pretty much how that 2-day is steering. It's still got a day, over a day to go on it. So then if we look at the 1 day, we've bounced off the 1 day range trend, which is coming down here. We're holding the new 1 day support. So that's all moving the way it should. We had our bounce down here at the 56-ish level, which lines up with the monthly. And this is also why the monthly might not be the monthly. Bouncing on the monthly, straight on the monthly, is actually more likely that we're just bouncing on the daily. It just happens that those two levels look the same because you have a 1 day range trend coming through here, which lines up perfectly with where the monthly level is. So often you might think you've got yourself a monthly entry, but the monthly entry could dive deeper into the monthly before it goes up, and this bounce could just simply be the bounce of the daily. So the levels that we're looking at on here is 163 for the origin level. We've got a trend which is currently sitting up around that 165 area, and then we would retest the broken daily range at about 175, 176. It's got to get through the trend to do that. So if it opens on the day on the wrong side of the trend, which it almost certainly will unless we have a huge pump, if it opens on the wrong side of the trend, then it will be pushing through that. It lines up with where all the liquidity was that we talked about at the start, and therefore, if we're going to have a Monday trap, it's probably going to be a push up into that sort of area on SOL, into that sort of 168 to 175, 176, in that sort of area I'd be looking at. The way it's ranging here, it'll be bringing in a lot of shorts, which is what we've noticed. And then you've got that level there at 165, which would be a huge amount of stop losses sitting above there. Anyone who saw this dropping would have opened shorts and put their stops here. So smart money is going to look at that and they're going to go, there will be a big pool I can sell into there. And same thing when you get up here, there'd be a big pool around 170. And so if anything's going to push it through a trend, it's going to be the squeeze of these areas, which could push it up through that trend and potentially get into those 168s, 175 sort of levels. So, but yeah, like I say, don't chase those. Wait for them to settle because they could just pull straight back down below that daily trend. So if we look at this on the 2-day, which still has a bit to go, but just one of the closes from a day ago, we're back up above the trend and all the levels are basically the same. Break level there to retest at 168, and you've probably got, say, this inverse here at 175. So all lines up with the liquidity. And then you got your 2-day hold level at 186, 187 for the origin level. So it's all, and the 2-day trend is up there at about 185. So could we get there? Yes, it's possible. Would we reject before? Probably. And looking at this on the, that's the monthly on the left, which is obviously a bigger move and play. The monthly range trend actually comes through, funnily enough, at about 179 at the moment. So we've never managed to close over that. and that is really the ultimate one we want to be. We want to be opening next month's candle over the top of that trend, and we want to be hard closing that candle. If SOL has any chance of hitting all-time highs, it needs to be over that. So it would have been awesome if we'd done it this month, but they just sold the heck out of it right on the last day and drove it down. So, and our standard running 1 month trend, which shifted, is still up there at that sort of 188 level. So as far as targets for the monthly bounce, when it actually is a verified monthly bounce, like I say, could just be a daily. The targets for it are the 179 or that sort of 189 area at this stage. Total market cap is going to well, it has pulled back under the monthly. It still really has to reject to either trend or to this hold level down here. So nothing's changed there. More of a sign that we need to go down before we go up. And it's creeping back up into the 2-day range. So doesn't mean too much. The 4-day is pulling back to trend because it opened on the trend, so it doesn't mean much, but it's why we're seeing a bit of strength all in Confluence. This so 3-week close today. We're going to close above the 3-week break level, so that's positive. We've rejected off the trend. We're going to close above the break. In the next 2 hours, be watching to see whether this 3-week candle here closes in distribution or accumulation, because if it closes as it is at least a break. And it's an expected rejection because it's rejecting off the backside of this range trend that comes through here. Now, if it closes in distribution, then it's not a hard close of the 328.27 level, in which case it's definitely going to want to come back down to more around that 300 area there. So it's one to watch. It doesn't take much to flip that candle from being yellow to blue in the next 2 hours. And this is our 3-day range trend play, which is in motion. The first resistance for that 3-day play is 175, which brings more confidence to everything you've just seen. And then if it breaks through the 175, then you'd be looking at areas, up in that sort of 190 area again. So there's not too much else that would slow that down. So that's the 3-day play. Because it's still got a day and 3 hours to go on it, it can still dive today. So it could come down and grab one of these lower levels and then head up. But as it stands, it's 175. And if it hit 175 today and there was some really bad news come out on market open on Monday or something along those lines, then it could come back through that trend within the same day and then find this weekly hold and then go back up again. But it's kind of good that this is in play, because as long as it stays above that range trend, we should see minimum of 175 recovered. That's just working its way up. The minimum for bounce for the monthly hold level is also 175. So when these numbers just keep popping up, it's usually a pretty good sign. You're going to see these numbers. And that 5-day to there. So with something like this on the 5-day, it's on trend. It's not breaking trend, but the next candle can go down before it goes up. So there's almost zero chance this is going to retrace to that trend on this candle. However, if it was to open the new candle and find some form of rejection, which could be that inverse level there, which is also a fib level at 175 again, then it could come back down to 153 and then come back up to retest. So just again, more Confluence. Same thing here, 170s, based on 4-day trends. This is our 8-hour, so we're developing an 8-hour range, and this is what we want to see. Is we want to see this candle actually close, more or less exactly like this, if we can, because then it creates an 8H uptrend like that, and then we can bounce off that trend to try and push through these levels. And then the exterior 8-hour trend is sitting up there around that 167, 168 level. I don't want to. Let's have a look at this. What's this? 170. But it's a tested inverse at 170. What else we got? The backside of a range. Untested backside of range. Guess what? 176. So if the 8-hour starts to break trends, it's going to head up and reject off the backside of that range, funnily enough, in the 170s. So probably stop worrying now. Everything is pointing to the same places, but by seeing all this, you can, I guess you can start to understand how I find these targets. It's just Confluence across all timeframes, trends and holds, breaks, resistances. So here, likewise, you've got a 2-week close today. We are bouncing on the 2-week trend. We have this 4-candle block in here. We have a range trend on the bottom here. That range trend is coming straight through there, and it's about 175. So there is a lot of Confluence pointing to 175. So we'll see how the day ends. If it gets a substantial sell down towards the end of the day, then that's obviously really bad, because we don't want these levels realistically to be closing in too much under these trends. We want them to be closing above the trends, or at least we want them to open on the trends. If we get a bit of a push up, then that's great, but it doesn't take away the fact that we've still got resistance levels. We really would have to just go magically up above 180 today and then open the next candle if you really wanted to change or narrow down the possibilities of the future and make them more bullish. So yeah, hopefully that's giving you a bit of insight as to what will come. Like, subscribe, all that stuff. I'll keep posting updates as I see things develop, and I put a few of them on Twitter as well, or X, so not a bad idea to keep an eye on that. And feel free to jump into the Discord if you have questions on how all this price structure stuff works. And there's me and some other really, really good traders in there. So yeah, come on down and hopefully we'll see you there. Cheers. Bye.